Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Friday, September 4th, 2009. We begin today's broadcast with the day's big news, the U.S. Nonfarm Payroll Report. The number of jobs lost in the U.S. in August eased to 216,000, which was smaller than last month and slightly better than the consensus forecast. However, July's figure was revised downward to show a bigger decline in jobs. The unemployment rate also jumped to 9.7%, the highest rate in 26 years, which can have an important impact on consumer confidence and spending. So let's see how this affected our majors. The euro-dollar pair, which had been gaining quietly prior to the release, fell in the wake of the news as traders and investors digested the higher unemployment rate and revised July data. However, after testing the 1.42 area, which was support earlier this week, the pair rebounded strongly and hit a new session high near 1.4325. The catalyst was a rise in U.S. equities as investors fixated on the smaller than expected number of jobs lost than the higher unemployment rate. The pair then adhered to its downward sloping line of resistance, which ended the rally. The pound dollar also saw a back and forth movement, with the pound rallying to test its upward sloping line of support. That was also yesterday's high. The pair has found some support earlier in the week near 1.61, and next week will determine whether we have a move higher towards 1.6550 or back down into its range seen the previous 2 weeks. The dollar-yen extended its gains from yesterday, with the non-farm payroll causing a sharp move up, then down, and then returning to its overnight trend. U.S. stock indexes were up around 1% heading into the Labor Day weekend, with the S&P 500 handily atop the 1,000 mark. The dollar-Swiss franc pair stuck to its recent range. Following a non-farm release, the Greenback rose to 1.07, met resistance, and fell back down sharply as U.S. equities began to rise. The currency markets therefore remained trapped in consolidation, unable to break their recent ranges. One pair where that was not the case was the Aussie-US dollar pair, which cracked the 0.8470 level, an area of resistance that has held for the entire month of August. Following a succession of higher lows, the pair extended its rally from 0.8250 to push to a new high for this year. If the Aussie manages to hold on to these gains, will be tested early next week. Another fundamental release today, the Canadian economy created 27,000 jobs in August, a figure that was much better than forecasts, which had called for another month of job declines. It's the first month of job growth in 4 months, though the unemployment rate did inch up to 8.7%. The data gives a positive indicator of the Canadian job market, which in turn means that the country may be emerging from its first recession since 1992. The US dollar-Canadian dollar pair fell in favor of the Canadian dollar, which for the session saw a 200 pip swing. The pair broke through a short-term upward sloping line of support and slid until it hit the 1.0820 area. The loonie was helped by the Canadian jobs report as well as the increase in US equities in the New York afternoon. That pushed the pair back into its ranging action we have seen for most of August. Next week starts with a national holiday in the US, so market liquidity will be low. Important releases to keep an eye on in the first half of the week include UK manufacturing and German industrial production figures. Wednesday will bring Australian employment figures and the interest rate decision from the Reserve Bank of New Zealand. That is followed Thursday by interest rate decisions by the Bank of England and the Bank of Canada. And that wraps up our coverage of the Forex market for this week. There will be no market recap video on Monday. Thank you for joining us here at CMSFX.com, and from all of us here at CMS Forex, enjoy your Labor Day weekend.